welcome to our special show, Bulls Charge Ahead. I'm Lata Venkatesh.
And I'm Sonia Shenoy. Well, let's take a look at all the top headlines of this week. The Bulls are in total control on the Lal Street as the Nifty hit a 52-week high this week. The cash market volumes were very high on Thursday at 30,000 crores.
Reliance leads the market rally. Stock gains 10% this week after LGO announces monetization of its services from April 1st.
And it's all about the telecom stocks. Idea Cellular gained 13% this week on the buzz that the merger with Vodafone is expected very soon.
And Axis Bank surged 7% this week as the suitors list for merger grows. A bank is believed to have informally approached the government seeking Axis's hand, and this led to competition from other big private banks as well. That's a CNBC TV18 exclusive. Well, that was some of the stocks that led the market higher. The important part of this week was that we got new stocks taking leadership. Reliance, a stock that has not performed for the past 3 years, came out and performed because of the geo effect. Axis Bank, again because of the CNBC TV18 story, led to a certain amount of interest just in Axis Bank, but in a whole host of private sector banks. IT stocks, actually, the laggards of 2016 did take up some bit of the bull interest. And in the end, we had a market that was rushing towards 52-week highs. Yes, profit taking towards the end of the week, not necessarily because of FNOQs. It's also because we were entering a long weekend, and towards 9,000, there was always a fear that somebody will come and take profit, and some people did it before the others. But perhaps the bull mirth will resume on Monday.
Oh yes, and there was so much more that happened this week, right? N. Chandra took over at the Tata Group, so all the Tata stocks were in focus. Bharti made an acquisition on Thursday, so that was the big talking point. And even outside the index, so many stocks, non-index large caps like RBL Bank, Bajaj Finserv, Bharat Forge, all hit fresh 52-week highs. So plenty to talk about, and let's invite our guests on the show now.
Naveen Agarwal, Managing Director at Motilal Oswal Financial Services, and Rajat Rajkaria, Managing Director and CEO of Motilal Oswal Institutional Equities, join us. Naveen, Rajat, thank you very much. Well, first up, Naveen, this bull rally appears to have come out of nowhere. We are at 52-week highs, almost at all-time highs. Are you getting a sense now that the market is risky to buy, that the risk-reward is not in favor of buying?
The answer to that question is yes or no, depending on your time horizon. If you look at the near term, we've just seen a 12% cut in our earnings estimate between September, pre-demonetization, and now. On the other hand, we've had the RBI credit policy, which has changed its stance from accommodative to neutral. And the debate has shifted from how much cut to whether the next move will be a cut or a raise, right? And on the third side, emerging markets continue to be out of favor. Global protection continues to be a discourse and a rhetoric, at least for now.
Yes.
So if you put all of these three things in conjunction with the move in the market from 8,000 Nifty to 9,000 Nifty and back to old highs, then clearly the risk reward from a near-term perspective is not looking that favorable. The number of stocks that you can find which are buys are not that many right now. Or the upside that you see in the stocks that you like is not very meaningful right now.
That's interesting. Rajat Rajkaria is also with us. Rajat, what would your view be on how to approach the markets now? Because we are getting leadership from various quarters. First it was banks, then it was IT. Now Reliance has started to participate as well. Do you see the market moving higher because so many legs are there to support it?
Well, if you look at the markets, even at 8,900 Nifty, while it may have rallied from the lows of sub 8,000, over a 2-year period in March 2015 also, we touched 9,100. So during this period, the markets have just traded within a range of 1,000 to 1,500 Nifty points. I think this market is definitely getting more legs to break this range finally, because somewhere the character of the last few days is quite positive. You know, you have one Nifty stock almost every day which is becoming a leader for the rally. Whether one day you had HDFC Bank, then another day you had Reliance, third day you can have some other bank, then TCS. I think the markets is making a serious attempt to break out of this range that it has held over the last 2 years, and this breakout should take markets higher from here.
Okay, well, Naveen is cautious, Rajat, but you think markets may rise. Naveen, would you say at least the downside is protected?
Yeah, so as I was telling you, the answer could be yes and no, depending on the time horizon. If you look at some of the other factors which may have a more important bearing in your long-term thinking process, bear in mind, Lata, that between FY8 and FY17, which is 9 long years, we've had a nominal GDP growth of double digit, and Indian corporate earnings have grown at 5% per annum. And in the process, the corporate profit to GDP, which used to be 7.8% in FY8, is down to 2.9% now. I mean, if our corporate earnings were to grow at 20% for the next 3 years, we would still be at sub 4% corporate profit to GDP versus our 10-year average of 5.2%. So that is one thing that you should keep in mind. The second is that you are seeing rising financial savings and falling physical savings within the household savings pool. And within the financial savings, you are seeing rising proportion of financial savings being directed to equities. In fact, FY17 will be the third consecutive year when domestic investors invest nearly $10 billion. And also bear in mind that the January SIP number of domestic flows into mutual funds is 4,100 crores of SIP flows alone. So if you were to just extrapolate this number usually goes up gradually. If you were to extrapolate this trend, that alone works out to a 50,000 crore SIP flow, which is like a 401k-like flow, more predictable, more sustainable, and grows itself from that base year after year. So I think once upon a time you had a $10-15 billion FI investment being considered as a big deal for the Indian markets, and now you are setting yourself a base of potential SIP flows of $7-8 billion and potential domestic flows of $10 to $12 billion and rising from there over the coming years. So, you know, you are at the bottom corporate profitability, and a hope of a 20% profit growth remains, and the markets could deliver at least that much return. Strong domestic flows continue to be holding the market. So clearly the downside will be protected from expectations that margins will revert back to averages, that domestic flows will continue to be robust, and I think that changes the viewpoint if you look at the next 2 or 3 years time frame.
Well, that's quite an optimistic view there. Let's discuss some sectors, because this week you had so many sectors that participated. The space to be in this week, Rajat, undoubtedly was telecom. And it's interesting because last year, all of last year, metals, rallied, and almost nobody caught that rally, and this time telecom stocks are already up 30-50% this year, and almost nobody caught that either. At Motilal Oswal, how have you guys reacted to the competition from LGO, the movement on Reliance, and the M&A activity, the consolidation that's happening with the other players?
Right. Just couple of months back, we had released a very detailed report on telecom sector, where our analyst had articulated very well that how the drivers for the sector are now changing towards pro-growth. I just want to highlight 3 points here. First, the last 10 years has been just a decade of lost profitability for the entire sector. Second, this industry had 7, 8, 9 players, which is now getting limited to just serious 3 players in the making. And third, the capex intensity is now behind. Yesterday, when the market got excited about Reliance and the stock was up by almost 10-11%, right? It just didn't made 1 year high; it made a 10-year high. So this 10-year period of flat Reliance stock price finally saw a breakout. I think telecom as a sector is seeing that phenomena returning back. How long earnings will take, I think we will have to wait for a couple of more quarters before the pricing starts normalizing for companies to earn decent profits. But markets are not going to wait for that. And one company consolidating, another following up, the third one leading to a pricing strategy. All in all, this is an under-allocated space for investors, and people are looking for alpha. So this can well be a sector to create alpha in 2017. I think while the sector has done well over the last 1 month or so, when you will look over a 10-year period, this is a sector which has actually not created any value. This can be the beginning of that value creation in telecom.
Okay, let's get our own colleague in before we toss more questions at both of you. Reliance Industries was the one which was the catalyst for the telecom space. It was also top of the mind this week for other reasons. The stock hitting an 8-year high. The rally was fueled by an earlier than expected monetization of RelGeo by the company. Varinder Bansal, our corporate editor, is joining here with more analysis on Reliance.
Well, what a week it has been for Reliance Industries. 8-year high, crossing 1200 mark for the first time in the last 8 years, gaining nearly 40,000 crores market cap in a single day, thus adding idea to its market cap. Just wow. And all this why, the triggers, the first trigger of course was after Mr. Mukesh Ambani's speech, where the analysts predicted that Jio could break even on the EBITDA level sooner than what they were expecting post the tariff plan announcement. Remember Kotak and others, also mentioned, but Kotak said that even if 50% of subscribers were sticking onto Jio, then Jio could see EBITDA positive, or break even in FY18. That was the one trigger. The second technical trigger, and which I believe is the bigger one, was the under ownership of the stock. Remember, mutual funds exposure to Reliance Industries is only 1.8% of their assets under management, compared to Reliance weight in Nifty, which is nearly 5.48%. So clear under ownership over there, and huge one over there. FIs were underweight. The exposure to Reliance is 4.2% compared to Reliance weightage in MSCI, which is 5.6%. Again, a huge under ownership, and this led to index management, and hence the stock was up by nearly 11% last week. But as I said, huge week for Reliance Industries. Let's see how it continues from here on. People have huge expectations. We'll be waiting for FY18 numbers to see whether break-even on the EBITDA level happens or not, clearly going ahead.
Well, that was clearly the stock of the day, the stock of the week, 8-year high for Reliance Industries. Thanks, Varinder. We'll take a break on that note. But up next, we will continue our conversation with the top team of Motilal Oswal. Naveen and Rajat will be with us yet again. We'll also get you some more trading ideas with Ashwini Gujral on the other side of the break.